And welcome back. In today's video, we're going to talk about the latest trends we're seeing right now from Realtor.com, just posted on August 8th. This is actually one of my favorite videos I make for you guys each and every week because I actually share my own analysis of their own data. So I'll share their article, which just like my previous videos, I didn't even read it. If you guys do read it, please let me know if my analysis agrees to theirs. Anyways, this covers the week ended August 3rd. Instead of looking at this article, what I did is go to realtor.com/research/data, click on weekly inventory, and then click on this link right here, which takes you more or less to this information. We're going to talk about the changes compared to 12 months ago regarding asking prices on a national level, inventory levels, the number of new listings, days in the market, or how fast or houses are selling, and also the number of price reductions right now. On Thursday, which was yesterday at the time of filming this video, Redfin reported all-time record highs in the share of price reductions, and their weekly data goes back to 2015. Anyways, I have a lot to share in today's video, and if you guys get any value out of today's video, then please hit the like button. Also, if you guys want any, I really mentioned this, but if you guys want a edited video or a video edited for YouTube, please email me at jason@meetjasonwalter.com. I started a video editing business about 8 months ago. I don't do any of my editing. I haven't done any editing on this channel for, 5 years, 4 years. But I have a fantastic editor who's been with me basically since day one. Thank you, Christian, for helping me with my videos and helping our clients, of course, as well. So let's talk about asking prices on a national level. So asking prices actually decreased by 0.7%. This marks the second consecutive week in which asking prices are down year over year. In addition, the change in asking prices have been relatively flat ever since February this year due to rising inventory levels as well as elevated home prices and mortgage rates. I expect sales to remain subdued in the near term due to affordability issues or challenges that home buyers are facing right now, elevated rates and home prices still. In regards to inventory levels, that rose by 35.9% from the same time frame in 2023. On top of that, there's been more existing house for sale compared to last year for the past 39 consecutive weeks. In fact, we've had rising inventory from the previous 12-month period ever since really mid-November last year. That's, of course, great news if you're a home buyer. You want to see more options to choose from because back in 2020 through the early parts of 2022, houses were selling very, very quickly, making it very, very challenging to buy houses. So at least we have more houses for sale, but we still have challenges for buyers right now because of affordability issues. One thing I've been mentioning to you guys though over the past several months though is that the growth rate of inventory compared to the previous year has been more or less stagnant now for 3 months. Going back to mid-May, the growth rate has been paid in the range of 35 to about 38%. As you can see right here, inventory basically moving the same rate as last year ever since mid-May, even though we're much higher compared to last year right now. So the growth rate has been basically paid at around 34 to about 38% for 3 months now. So my take on this is likely from only single-digit gains of new listings, whereas before that, we saw basically double-digit gains of new supply hitting the market. So new listings have been rising by only single digits for about 3 months now. And I'll talk a little bit more about that here in just a little bit regarding new supply hitting the market. If you guys follow the channel, you guys all know I like to share multiple sources with you guys. So let's have a look at inventory levels according to altosresearch.com. Their most recent stats is actually the week ended August 2nd. They're reporting around 684,000 existing houses for sale. Again, excluding multifamily units, of course, excluding brand new home construction. At this time last year, there was only 489,000. So we have approximately 195,000 more homes for sale. That's an increase of about 40%. Now, something I've been talking about for several months as well is that just like the stats I'm sharing in Realtor.com's report, the growth rate of inventory has basically been paid at around 40%, looking at data from Altos, whereas Realtor.com has been paid around 34 to around 38%. So the growth rate has been more or less moving in line with last year's levels ever since May, even though we have, 40% more homes for sale from last year. So therefore, the growth rate compared to last year has basically been flat for the past several months, paid around 38%. Looking at data from altosresearch.com. But wait, there's more. I want to share the growth rate as well. This is a very important metric to look at because we want to see what's the difference in the amount of houses for sale right now compared to the start this year. Not just looking at year-over-year changes, right? So right now, based on my nerdy analysis of their data, this is Altos Research, there's around 185,000 more houses for sale right now compared to the start this year. So we're up by about 37% is a growth rate so far this year. Compare this to the same time frame last year, we were only up by 4%. So in other words, supply is growing much faster this year compared to last year. It's also rising much faster compared to pre-COVID levels. So for example, housing inventory rose on average by 16% from January through July of 2019. That's based on my own analysis of Realtor.com's latest data. However, the increase from January through July this year is a growth rate of 33%. So the average, looking at pre-COVID levels, it rose by 16% on average, whereas this year it's basically double that at 33%. Something you guys should be aware of though is that I'm seeing videos regarding, people think that inventory is growing so much faster than years past, even faster than 2022. But the data does not support that. So look at this. The average increase that we saw during the same time frame, this is January through July of 2022, in fact, was an increase of 83%, whereas this year it rose by only 33%. This, my friends, is why I do not expect to see a sharp pullback in home prices this year like we saw in 2022. Let's keep an eye on the coming months, of course, because a lot could change. So to summarize this, inventory is not only up by about 40% year over year, but it's also rising much faster compared to pre-COVID levels, but not nearly as fast as 2022. We also have approximately 28% fewer houses for sale right now compared to 2019, but that gap has actually been narrowing. About 2 months ago, I believe the difference between this year and 2019 was about 40%. Now we're down to about 28%. So part of the reason why we're seeing basically this stagnation of growth of inventory levels ever since really May is due to this right here. New listings only increased by 6.7% from 12 months ago. Homes are being listed for sale have basically been losing momentum to say the least ever since really the beginning of May. It's rising only by single digits ever since May. Before that, we saw double-digit increases in the number of new supply hitting the market or new listings. In my opinion, this slowdown in the growth rate of new supply hitting the market appears to be one of the reasons why inventory is not skyrocketing. And of course, if you guys want to see home prices fall greatly, watch inventory levels. We want to see inventory levels basically skyrocketing. And right now we're far above last year's levels, but basically stagnant over the past several months. Let me share an example with you guys real quickly here. So February 3rd through more or less the end of April, we saw double-digit gains in the number of new listings, except for the Easter holiday week. And of course, the week ended February 10th. But for the most part, we saw gains in the range of 10 to about 17%. Whereas ever since the beginning of May, we have been more or less been seeing single-digit increases in new supply in the market. Here's what we also know as well. Let's talk about how fast or how slow houses are selling right now. Last week, it took about 5 days longer to sell a house compared to 12 months ago. Also, houses have been spending more time in the market compared to last year for the past 13 consecutive weeks. This, actually I misspelled that. This is much different compared to October of 2023 compared to March this year, when houses on average were selling faster compared to 2023. Therefore, as houses are taking longer to sell, this is all contributing to the rise of housing inventory. This is also contributing to the rise of price reductions as well. So last week, the number of price reductions increased by 47.5% year over year. This marks the 28th consecutive week in which we've been seeing a rise in the number of price reductions across the United States. For comparison's sake, even though we're up substantially compared to last year, it's not rising nearly as fast as the triple-digit gains we saw in late 2022 through early of 2023, which is right here, more or less. November through, when was this? Through March, we saw basically triple-digit gains. Look at this week. February 4th, 170% increase in the number of price reductions. Now it's an increase of only 47.5% year over year. Let's also have a look at AltosResearch.com for this share of price drops. According to them, for the week ended August 2nd, the share of price drops is at 39.43%. So that's the number of price reductions. Let's have a look at this share of price drops. That's basically at 40% right now. This means that 4 out of every 10 homes for sale nationwide have reduced their asking price. That's the share of price drops at basically 40%. This is at least a 5-year high going back to 2019. Back then, which is right there, the share price drops was basically at 36%. It's also higher compared to the same time frame in 2022. Back then, the share of price drops was slightly below levels right now at about 38%. All right, if you guys are still watching today's video, I appreciate it so much. Please hit the like button. Also, consider subscribing as well. Help us reach 100,000 subscribers, maybe in a month. I mean, that'd be awesome. All right, number one, and this summary, by the way, is more or less a summary of today's video, of course, but also a summary about more or less what happened this week in real estate news. So number one, the growth rate of asking prices has basically lost ground ever since February and has been in negative territory for the past 2 consecutive weeks. This is from a significant increase in the number of houses for sale, as well as elevated rates and home prices, which is causing sales to remain sluggish. Number two, housing inventory increased by 36% year over year last week, but the growth rate has basically lost momentum for the past 3 months. Has been pegged at around 35 to about 38%. In my opinion, this is from single-digit gains of new listings. In other words, new listings rising by less than 10% from last year. However, there's still about 28% fewer houses for sale across the United States compared to the same time frame in 2019. Before I get triggered in the comments, or people are triggered in the comments, real estate is local and regional. As of July, based on data from Realtor.com, this actually stats I actually pulled from ResiClubAnalytics.com using Realtor.com's numbers for July in Texas. There's 6% more homes for sale compared to 2019. Idaho is up by 6%, Florida up by 5%, and Tennessee is at a 2% gain from July of 2019. In addition, Washington, Utah, Colorado, and Arizona are not too far behind as well. They actually have approximately 1 to about 5% fewer houses for sale compared to 2019. Once we have August stats, which will basically be released in about 3 weeks, it'll be interesting to see if Washington, Utah, Colorado, and Arizona have more houses for sale compared to August of 2019. Stay tuned for that. The significance regarding this, one of the reasons why I mentioned this is that the areas that have more inventory compared to pre-COVID levels are experiencing slower home price growth and in some cases outright decreases in home prices. Number three, 78% of homeowners who do have a loan on their house are locked into a rate below 5%. That's based on data from Freddie Mac through January of 2024. This has been limiting the amount of people listing their house for sale. A lot of people who have rates at 3%, for example, don't have a whole lot of motivation to sell their houses and take on a 7% rate if they want to buy a new house. And we all know that most home sellers are home buyers as well. On top of that, new listings have only been increasing by less than 10% since May, which has been limiting the amount of new supply hitting the market, new listings. Therefore, I do not expect to see a surge or a huge surge in people listing their house for sale unless unemployment absolutely spikes. In other words, I don't think we're going to see a lot of new supply hitting the market, a giant increase of new supply, unless people are forced to sell their houses, and that would be losing their jobs. Number 4, the share of price reductions is at least a 5-year high during the same time frame and has been rising faster than 2023, but slower than 2022. A friendly reminder, the share of price reductions has seasonal trends and tends to peak in the winter months. So we'll have to see here, because the share price drops at around 40% right now, will likely be higher in a few months from right now. Number 5, last week, houses on average took about 5 days longer to sell, and homes have been sitting in the market longer than last year for the past 13 consecutive weeks. A friendly reminder here again is that days on the market is a lag indicator of our housing market based on a closed home sale. So therefore, this is really what our housing market was like approximately 1 to 2 months ago when the home buyer got their offer accepted from the home seller. But wait, there's more. Number 1, earlier this week, basically to start this week, we had a decrease in 30-year fixed rate mortgage rates down to about a 1.5-year low. The average daily rate on Monday, I believe, according to the Mortgage News Daily, was at around 6.3%, which basically was a 1.5-year low. But rates have increased slightly ever since then. And by the way, I'm making today's video on August 9th on Friday. Even with this decline in rates, housing affordability is still a huge hurdle for home buyers due to elevated rates and, of course, elevated home prices as well. Number 2, the most recent stats we have looking at mortgage purchase applications from the MBA show that applications decreased by 11% year over year for the week ended August 7th. Also, according to the National Association of Realtors, or NAR, they reported that pending home sales for existing houses in June fell by 3% compared to June of 2023. It remains very close to all-time record lows. In addition, looking at new home construction sales, and the U.S. Census Bureau defines that as a sales contract signed between a home builder and a home buyer. So these sales reported from the U.S. Census Bureau are really more acting like a pending home sale than a closed home sale. So therefore, looking at sales of new home construction in June, that fell by 7% on a year-over-year basis, whereas the existing or the resale market fell by 3%. So because this decrease of 7% in June fell to a 7-month low, home builders having a more challenging time to drive home sales, even though they're still offering incentives to try to entice home buyers to buy their houses. The drop in sales is absolutely staggering, given that there's more new single-family houses for sale this June since February of 2008. That's for new home construction, much different compared to the resale market for existing houses. Number 3, looking forward for the nation as a whole, asking prices were down slightly last week, inventory's up, and homes are sitting on the market longer. And on top of that, we're seeing the rise of price reductions as well. We are moving towards a buyer's market, not in one, but moving towards that direction. But it could look a lot worse, right? If we had this environment in which mortgage rates were surging to 8% again and inventory was absolutely skyrocketing, I would be ringing the bells saying, hey, home prices are going to decrease. This is getting ugly. But right now we're seeing a stagnation of inventory growth. And on top of that, rates as of late have basically been decreasing. Plus, every housing market is different. Inventory in California and the Northeast part of the US have a lack of houses for sale compared to 2019, whereas inventory is absolutely piling up in Texas, Idaho, Florida, and Tennessee. Number 4, I appreciate you guys so much for watching today's video. Please like and subscribe. Have an amazing day, and we'll see you in the next video.